Good afternoon, Happy New Year, and welcome to the first webinar of this year following our quarterly price index. Apologies for the slight delay. I'm just in the process of uploading the slides, but today we'll be looking at how prices have moved in the last quarter of 2021 and also what we've seen so far this year. So obviously it's a big one with the regulatory changes that have happened, and there's been a lot of movement in the market, and that both towards the end of last year and into this year. Okay, firstly, a little bit about Pearson Ham. So we are pricing consultants. We work in multiple industries. Our mission is to help our clients improve performance through better pricing. Recently in insurance, that's involved helping our clients become more agile and take a more dynamic trading approach and be able to react and respond to the market through improvements in governance and process. We've also looked at effective responses to the regulatory change and pricing strategies which would enable effective trading through this period and helping our clients think about multi-channel approaches where they act as both wholesalers and retailers of insurance products. We also provide market pricing insights and updated views on competitor movements, and that's what we'll be using today to look at our quarterly index. If you'd like some more information, then please click on the link which should be appearing now, and that will provide some more insights into our kind of market price tracking. I'll give a bit of information about our methodology and how we capture the prices. We'll then look at motor insurance and how prices have moved in that sector before moving on to home, and then we'll have a brief look ahead. So I think we are in a kind of a uniquely difficult to predict market. So we can look at what we've seen so far and what that might indicate for what's coming up. And then I'll open it up for any questions that you may have at the end of the presentation. Please feel free to log any questions in the chat as we go through, and I will kind of endeavour to answer those if we have time at the end. Okay, so our methodology, we have a panel of real consumers whose details we run through the comparison sites, and it's the real people's details, the real risk profiles, so their vehicles, their mileages, their addresses, so whatever information they have given us as a real consumer is what we use to generate the prices. We run quotes on a daily basis through the Big Four comparison sites and are able to get a day-on-day view. So we have a rotation of panel members that run each day, but we always have a view on daily movement for the same individuals. So we are constantly refreshing and recruiting new panel members to make sure that the prices that we are generating are accurate. We also take great care in terms of data cleansing, so looking at any unusual movements, looking at outliers, and taking out data that we believe not to indicate price movements, but to be caused by the result of some type of pricing rules, so that what we report is actual price changes in the market rather than something that may be caused by data collection or something else. We produce daily reports which are available online through Tableau, and we also send these out to our clients so that they're able to track general market movement, their own position in terms of competitiveness, and how competitors are changing prices, and enabling them to respond and react appropriately. Okay, so moving on to motor insurance. So what have we observed in motor insurance pricing towards the end of 2021? So looking at Q4 in isolation, we will see that there's been a further drop. So following the trend that we've seen throughout the year, another 1.8% has come out of market pricing, with a 0.8% reduction being observed in December. I think it doesn't quite give the full picture. So looking at this, given the methodology, most of the prices that are being compared for December have been collected in advance of the last few days of the month. So we have actually seen quite a bit of price movement on the 29th, the 30th, and the 31st, which we've picked up in our daily tracking and which is being reported now in the January figures. So we will come to that a bit later on. So in terms of looking at the Q4 movement, what we see here, it is showing a further reduction, but that doesn't quite give the full picture, which we'll come on to shortly. So looking at the full year movement, prices have dropped. So we've seen the trend continuing. And from this, it would appear that little pricing action has been taken ahead of the general insurance pricing practices changes coming up in January. However, as I say, the methodology means that the price movements at the end of the month of December haven't quite been captured here. And we will kind of show those later on. Looking over the past 24 months, we can see that motor insurance prices have dropped by over 13% during that period. And considering we had actually started to see some price increases in Q1 pre-pandemic 2020, and since then there's been a fairly consistent downwards movement, which has taken us to this point, which is about 13% lower than we were at the beginning of 2020. So as I say, the methodology slightly masks what's actually been happening in response to the regulatory change. And the picture here shows the monthly movement, including January month to date. And this month to date figure goes up to the 10th of January. So by the 10th of January, prices which we'd observed were around 7% higher than those in December. So this is looking at the same profiles, quotes that were run in December versus quotes being run at the beginning of January. So although price movements for Q4 are being reported as downwards, if we include some of the movements from the 30th and 31st of December, then things do look a bit different. So we saw an average of the top 5 prices increase by around 2% at the end of the month, then another 4% into another 3% on the 1st of January. And then we've seen some movement since then. If we look at some of the individual insurer movements, then we can see that there's quite a range. So what we're looking at here is a top 10 of large motor insurance providers. And they are ranked 1 to 10 based on total movement through 2021. So 1 is where the biggest reductions of 13% have been observed for that kind of 1 year period, and 10 is where the biggest increase of just over 7% has been observed. They are ordered by movement in Q4. So the ranking, that's the reason for the ranking of this 1, 3, 2, 5, because the ranking is based on the full year, and the ordering in the chart is based on Q4 movement. So we can see there's quite a range of price movements that have been observed in Q4. So as it's clear that the average movement is masking a multitude of different approaches that we're seeing at an individual insurer level, and we can obviously see the range here from a 15% increase in the quarter to an 11% reduction. So different strategies are playing out as we had expected to see in response to the regulatory change, and depending on who your competitors are and where they are and how they're moving, it's going to be impacting you differently. So again, looking at some of the individual provider movements, we've definitely seen some land grab strategies happening. So here we can see in Q4 price reductions for quite a number of those large insurers, some of them ending the year, as I say, up to 13% lower than they were at the start. We've also seen within the top 10 some quite sizable increases coming through in Q4. So our kind of the increases here up to 7% from where people were at the beginning. So that kind of broad range of price movements upwards and downwards is where we find ourselves at the moment. So a lot happening and a lot of different strategies being observed. I mentioned earlier on the phasing of some of these price changes and how they wouldn't quite be captured fully in the monthly view. And this gives a bit of an indication of some of that. So our daily data allows us to see exactly who's been doing what and when. So here we can see some of the large providers increasing prices in the final week of December. So we've got prices here from 7% increase going in on the 30th to a 20% increase for this insurer going in on the 29th. So some fairly significant price increases being applied in the very last days of the year. So we can see that insurer one increase of 20%. So they had ended the year 13% down, but actually, if we add in the final days increase, that takes them up again. So again, there have been some sizable increases being reported, so quite unprecedented in terms of what we are usually observing, and also changes flowing through into January. So we've seen some movement into January where insurers, they may have held renewal invites for a week, or they may have sent out some renewals early in December to wait and see what the market was doing before deploying changes in response to the regulatory change. So we can see here in insurer 4, who had dropped by 9% during the year and didn't make any changes in December in advance of the new changes coming in, increasing by 15% on the 6th of January. We can also see insurer 5, who dropped by about 6% throughout the year and another percent in Q4. And they didn't do anything in the last week of December, but actually they waited a bit, and we can see that there's been a 4% increase here on the 6th of January. We also see down here, there has been some of the change backed out. So some rate adjustment already taking place in the first week in January. So this is, again, it will be possible if you have a daily view of market and competitor movement to be able to respond in this way. So this insurer who increased prices by 17% on the 30th of December has allowed that to flow through. And we've seen a bit of recalibration, and a 3% cut has been deployed on the 5th of January. So as I say, there's a lot going on. There's a lot of movements. Each insurer is acting in a different way as they pursue different strategies, and changes have been deployed at different times, whether it be towards the end of December or actually into January. Moving on to home insurance. So what have we seen here in Q4? Actually, a lot of the price increases ahead of January happened earlier in the month in home insurance. So we were seeing changes being deployed within the first week of December, actually, which means that they are picked up in the overall monthly figure for December. So if we move on. So we can see actually looking at the trend throughout the full year, then we've seen prices come down as they have in motor, but also we've seen them come up again in December rather than continuing that downward trend. So there's been a 4.4% increase was observed in December. If we add January in there, so we're seeing the same effect, the same activity as we have in motor, where more of those changes have been implemented towards the end of the month and also into January. So on top of the 4.4% change that's being observed for December, we're also seeing an 8% increase coming through for January month to date. So that's up to the 10th of January prices that have been collected. Again, looking at individual provider movements, there's quite a range here and quite a lot of significantly high figures that we're seeing. So as with motor, there's a range, but if we look at some of the increases that have been deployed here, we're going up to 65% price increases at new business, ranging from a kind of 12% reduction up to a 65% increase level. And bearing in mind, this isn't the minimum and the maximum that we're seeing within our data set. This is a sample of 10 large providers, and these are the price movements that we've observed for that top 10. So these are big players. These aren't small brands that happen to be implementing very large increases. So again, it's quite a significant movement and a lot of different actions and activities taking place at an individual insurer level. So if you're looking at the trend throughout the year, we can see that even where prices have ended up at a lower point than the beginning of the year, most of the insurers have been kind of implementing increases in December. There's a slight difference here in terms of Insurer 1, who dropped prices between November and December. So we saw a further drop there. And also we've seen some significant increases happening. So that range in Q4, driven by a lot of movement within December, actually. So we can see here 60% increase, 46% increase for these providers in the last month of the year. Again, looking at it on a daily basis, similar to the picture that we've seen on motor, we have got these increases coming in. We've got 16, 17, 19% increases coming in on the 29th, 30th, 31st of December. So even though a lot of the providers were putting in changes earlier in the month, there were also others who waited and then implemented the changes in the last few days of the month there. Similarly, looking at the first week in January, on a daily basis, we can see that Insurer 1, and going back to the previous couple of slides, Insurer 1 is one that deployed price reductions in December. So we saw those prices coming down, and we've seen those go up by 6% on the 5th of January. And there's also been a bit of a bumpier deployment for Insurer 2 here, who we saw an increase of 7% on the 4th of January, which was then followed by a 4.6% reduction on the 5th. So there may be some teething problems there with the systems, or this could be a deliberate price change in response to what's been going on in the market around them. Looking at contents only, we're seeing a very similar picture, reaching the year at a lower point than combined buildings and contents, following the bigger reductions that we've seen throughout the year. And in terms of looking at what's been observed in January. Again, it's a very similar picture. So we've got that slight increase in December, and then we've got an 8% increase for prices in January. And this is a comparison of combined and contents only cover. So we can see that the trend looks very similar. The end point is slightly different, where we are now showing combined cover as being about 6% higher than it was at the beginning of 2021, whereas contents only is still slightly lower than it was at the beginning of last year. Okay, so looking ahead, as I say, it's a uniquely difficult time to try and predict what's coming up. So what do we expect to see? Well, it's clear that we're going through a period of rebalancing of acquisition and renewal prices, with very little continuity in approach by individual insurer. So those different strategies are playing out as expected. And last time I talked about potential increases of 5 to 10% in Q1, and we're seeing some of that come through already. So there's been a lot happening. There's a lot of moving parts, and I think from what we can see here, this shows the kind of the impact of general insurance pricing practice changes so far. And again, this is using the data up until the 10th of January. So for private car, we're looking at about a 7% on average increase so far. For combined buildings and contents, it's slightly higher than that. We're looking at about a 12% increase, and contents only is about a 9% increase. So we are seeing that kind of 5 to 10% range that kind of we were expecting to see in Q1 coming through now. What do we expect might happen next? Well, again, it's difficult to say. I think insurers have given themselves some flexibility through introducing a new product tiers and experimenting with differential channel pricing and different strategies across different comparison websites. There's also still a kind of a relatively favorable claims environment, which could help to dampen some of the price increases that we're expecting. So that could enable new business prices to be kept down to an extent, and new propositions in telematics and pay per mile, which again could play a part in that. However, I think we will continue to see a lot of individual insurer movement, and this can be masked somewhat by the market average. So providers will be recalibrating based on competitor movement and the impact on their own competitive position, and also their renewal performance. So how customer behavior is changing with regards to retention is going to be a driving factor here as well. So I think we're in for some more turbulence as the market stabilizes, and that's going to be in Q1 and beyond Q1, I think, as strategies develop and as changes in customer behavior become clear. I think what's sure is that those insurers who are able to react and respond quickly to change are likely to be at an advantage as the market shifts. Okay, so I shall open up for any questions now. We don't have a lot of time, but I'll have a look through the chat to see what's come up. So there's a question: Are there any signs that insurers are making changes differently? Yes. So I think we are seeing quite a lot of difference in price movements, and the range is clearly showing kind of massive differences in approach. How long do we think it will take the market to stabilize? I think it's not a short-term thing. I think individual insurers will take time to calibrate and develop their pricing strategies, and I think it's likely to take kind of an extended period of time. So Q1, Q2, perhaps towards the end of the year, and I think we're entering a new phase when we get to January 2023, where prices have been set on the new basis, both in the previous year and in that current year. I think we'll be looking at more turbulence and changes in strategy again. So I think it's not a short-term thing. Okay, so if you'd like any more information about how we may be able to support, then please click on the link that's available here now, and I'll be happy to kind of talk to you. If you want to contact me directly, then you can get me on this number, or you can email me at stephenkennedy@pearsonham.com. So hopefully some useful insight for you there, and I look forward to our next quarterly webinar and catching up on what we might have seen in the first quarter of this year. Thanks very much, and have a good afternoon.